Hello and welcome. You're watching the Business Today show with me, Sakshi Batra. First up, the top news we're tracking for you tonight. Top industry honchos find themselves taking sides as the debate over 70-hour work week rages on. Several CEOs point out that outcome is more important than hours, while others say there is no alternative to hard work. Stock markets could plunge by 25% if NDA loses power in general elections, says Chris Wood, the global head of equity strategy at Jefferies, calls India the best growth story in the world. Markets end in the green for the second consecutive day. Sensex up 330 points. The Nifty was up 94 points today, with energy and realty stocks leading the rally. Investors put the brakes on auto stocks, which recently touched lifetime highs. Blackstone buys controlling stake in Care Hospitals and KIMS Health, deal valued at $1 billion. This is the US investment major's maiden entry into India's healthcare sector. We bring you an exclusive conversation with the Amul MD. India's favorite dairy brand plans a big organic foods push, also looking at revenues of over 1 lakh crore rupees in the next 2 years. Well, it's one comment which has split the Indian industry like seldom before. One of the most successful, most hardworking entrepreneurs of India, NR Narayana Murthy, has set off a storm after his statement that India's youth should feel the need to work for 70 hours a day. It's not only the social media which is abuzz with opinions, but the captains of Indian industry are also taking sides in this debate.
It was heartfelt, deeply emotional comment meant to push the youth of India into working harder. It was a comment by none other than one of the pioneers of Indian IT industry, who built a global company with nearly 3.29 lakh employees. But the comments created a storm.
Therefore, my request is that our youngsters must say, this is my country. I want to work 70 hours a week. You know, this is exactly what Germans and Japanese did after the Second World War.
Yes.
The German leader, he sat down with the German leaders, corporate leaders, and he said, we have to rebuild, and that's your job. And they made sure that every German worked extra hours for a certain number of years. So I hope our leaders too will be able to, when I say leaders, corporate leaders too will be able to address our youngsters and say, for the first time, India has received certain respect. This is the time for us to consolidate and accelerate the progress. And for doing that, we need to work very hard. We need to be disciplined and improve our work productivity.
The social media immediately erupted. Most youngsters were aghast at the very idea of working 70 hours a week. The backlash saw some big names joining in tide. Harsh Mariwala, chairman of Marico, tweeted that instead of work hours clocked in, it should be about the quality and passion that one brings to those hours. Ronnie Screwvala, film producer and entrepreneur, concurred with Mariwala, saying that increasing productivity was not only about clocking in longer hours, but also about getting better at what you do and upskilling, having a positive work environment and fair pay for the work done. Ashneer Grover, the deposed founder of BharatPe, added that problem was with work still being measured in hours rather than outcome. He also wrote that there is also a feeling as if youngsters' laziness is only thing keeping India from becoming developed. Edelweiss CEO Radhika Gupte highlighted the fact that Indian women had been working much more than 70 hours a week to build India at work and at home, only for this contribution to be largely ignored. Those who back the idea of hard work include the Ola founder Bhavish Agarwal, who said he totally agreed with Mr. Murthy's views. He added that it was the moment to go all in and build in one generation what other countries have built over many generations. Another backer is Sajjan Jindal of the JSW Group, who in a long series of tweets was clear that India did not need a 5-day week culture. He cited the example of Prime Minister Narendra Modi, who he said works 14 to 16 hours a day. Adding that he himself works 10 to 12 hours a day, Jindal stressed on the need to find passion in work and in nation building. The outgoing CEO of Tech Mahindra, CP Gurnani, backed his fellow IT entrepreneur's statement, saying the 70 hours are not limited to the company. They extend to yourself and the country. Explaining this further, he said that this meant working 40 hours for the company and 30 hours for yourself. TV Mohandas Pai, the ex-Infosys CFO, came out fully in support of his former boss.
To improve your productivity wherever you work, to learn on the job, that requires hard work. And you must do it yourself to improve yourself. And by improving yourself, you'll increase productivity and that will help the economy. And second, we are a very poor country. We all have to work hard. We can't goof up. Everybody doesn't have a government job where people don't care about the work ethic. Barring 15-20% of the time of people in the government, the rest don't put in the kind of efforts required. Look at the holidays and everything. And we pay the taxes. We work our butts off. Look at any successful person.
What's emerging is a clear divide. Founders of startups, in fact, are the ones in favor of longer working hours, having been part of the grind and struggles the past few years. Employees, on the other hand, want a better work-life balance and shorter hours. But what has also emerged from the debate is that a lot of women who balance children and work could find themselves at a disadvantage. Bureau Report, Business Today Television.
The Indian equity markets could fall by as much as 25% if the current NDA government is voted out in the next general elections. According to Jefferies Global Head of Equity Strategy, Christopher Wood, the biggest risk for Indian markets is not from US but from political instability. He, however, added that if the NDA government is re-elected, production-linked schemes will start gaining momentum. According to Wood, India remains the best growth story in the world, especially in the Asian region, adding that the current valuation of mid-cap stocks in India is still expensive. He also said that India needs to make it easier for foreigners to invest in the country, predicting that US will likely see a downturn next year. Noted economist Kaushik Basu has meanwhile said that the Indian economy is in a sweet spot and that India is in a better position than other countries to deal with the current global economic challenges. In an interview with Business Today Television's managing editor Siddharth Zarabi, Basu said that one of the main reasons that India is in a sweet spot right now is that India's GDP growth rate is currently higher than China's.
Overall, India's growth position, aggregate economic performance is pretty good right now. If you look at the GDP figure and the growth rate that is taking place compared to the world, India is doing fine, but there are buts. The main reason we are in a sweet spot now is that China has slid behind. Now, India's, if you look at the overall growth chart for the last 30, 40 years, the most phenomenal period was 2003 to 2011. India was performing at an extraordinary level. There was one dip in 2008 when the Great Recession hit the world. India recovered in 1 year. So, remarkable performance. But China was also doing very well. What is special now is India's overall growth is moderately good. China has dropped quite a bit, and globally also the political tensions between China and the Western economies means that there is going to be, with international capital, flight out of China that takes place, there's increasing hope that more and more will come into India. And as we have seen this year, a lot of money has indeed come into India. Part of it is because money had exited last year, but it has come in. That's the grand aggregate scenario.
Well, benchmark indices ended higher for the second consecutive session today, with energy and realty stocks really leading the rally. The market opened lower on mixed global cues and then extended losses in the initial hours, but the mid-session buying in some of the heavyweights really pulled the markets higher. Markets closed almost 1% up, with the Sensex closing 330 points in the green and settling the day at 64,113, while the Nifty closed the day at 94 points higher into the green, settling the day at 19,141. The top Nifty gainers today were BPCL, Ultratech Cement, ONGC, Reliance Industries as well as SBI Life. On the top laggards front, we had names like UPL, Tata Motors, Maruti Suzuki, Eicher Motors and Axis Bank. Well, India's largest dairy brand Amul is all set to make a big play in the organic foods market. The company is also looking at crossing 1 lakh crore rupees sales in a couple of years. And these were the details revealed by Amul MD Jayen S Mehta to Business Today's Krishna Gopalan in an exclusive interaction, where he also talks about the cooperative's massive expansion plans.
Why is Amul so enthusiastic about the dairy business? And please elaborate on the plan, sir.
Amul is India's largest food, dairy, as well as the FMCG company. And obviously, our core business is dairy because we are owned by 3.6 million farmers across 18,600 villages of Gujarat. And we collect, on an average, close to 10 billion liters of milk in the year, which makes us the 8th largest dairy company in the world. Milk is the growth driver of our business, and the products range that we make actually offers a very exciting opportunity to build on the market and the market share that is already existing. So we are investing big time into increasing our processing capacities, creating new plants and facilities, including greenfield projects and expansion of existing projects, expanding our distribution network, branch network, and also the retail availability. So all in all, it's a very comprehensive effort, 360-degree effort, right from the farms to the market, to strengthen the presence of Amul in the Indian market and also expand internationally.
So do you want to just mention a few lines on the value-added products in dairy?
As you're aware, half of our turnover comes from fresh products, which is basically fresh milk, buttermilk, curds, paneer, and so on. There is enough and big opportunity in growth of the fresh product market, which is basically distribution driven and strengthening the supply chain, as much as the growth in the products business. Like Amul has a more than 80% share of the butter market, but still butter penetration in India is not more than 25%. And same applies in case of cheese, same applies in case of ice cream, in ghee, in Indian sweets, and beverages, and a whole lot of products. So that's why the focus on strengthening the dairy product portfolio will continue for a long period of time.
Final question, sir. Why are you so enthusiastic about organic, and kindly elaborate on your plans?
Since we are talking about metamorphosizing into a food business, which means we need to be present in every single household item, which we should be present in every single segment which the household consumes. Of late, we have realized that there is an increasing awareness on the quality of food that we eat. And most of the food items are laced with pesticides and grown with chemical fertilizers. So in order to provide organic products which are free from chemical fertilizers and pesticides, we have started this initiative of launching a range of organic products. So we have already launched organic wheat flour, organic rice, organic pulses. We'll be soon launching organic tea, organic sugar, organic jaggery, organic spices, and so on. So this is what would make a good transition and an opportunity to be in the kitchen of every household in a much more comprehensive manner, which a much stronger portfolio. Having said that, there are a few products in our portfolio also which have a huge opportunity, which is basically the protein-based products. So we know that every Indian wants to have a strong immunity and have a strong longevity, vitality. Protein plays a very important part in it, and we all should be consuming 1 gram of protein per kg of our body weight every day. India depends on a lot of imported whey proteins, whereas Amul, as the largest manufacturer of cheese and cottage cheese, we have the largest availability of good quality whey. And from that whey, we have isolated the protein now, and we have launched a range of good quality and affordable high protein buttermilk, high protein lassi, high protein shakes, high protein ice creams, cookies, and even high protein lactose-free whey powder. So this is our effort to make protein available, affordable, and reliable to all the consumers across the country. And another part of improving and strengthening the immunity is the probiotics. So we have converted our entire fresh probiotic buttermilk into fresh probiotic buttermilk. More than 3 million liters of buttermilk at price of just 30 rupees a liter being sold across the country. So this is our effort to strengthen the immunity, health, and nutrition of our country.
Well, you can read the full exclusive interview in the latest edition of the Business Today magazine, which is on the stands right now. As stock markets hover near all-time highs, are there still opportunities to invest and profit? Or is the bubble slowly but definitely building? Here's a conversation my colleague Shailendra Bhatnagar and I earlier had with Nischal Maheshwari, the CEO of Institutional Equities at Centrum Broking, to find out the right strategy for investors in the current market.
How do you see the mood within foreign players? It's understandable if the US 10-year is at a 16-year high, then money will move back to Wall Street. But are these people willing sellers, or are they reluctantly going away from Indian markets? And at the same time, are domestic institutions lapping up this liquidity with both hands, or are they reluctant buyers?
So I think as far as FIs are concerned, I would say basically they have waited for a good period of time, and they are sitting on a good amount of profits in the domestic market. So it made a lot of sense for them to pull out money and go back to the US at the moment. But having said that, if Fed decides that maybe this week when Fed meets, this is the last hike, or the hikes are done for, then you might see some amount of reversal happening out there. So people might once again come back, and if India also corrects some bit, so they might reverse and start coming back to the country. As far as I think the domestics are concerned, I think they are loving it, because they are all getting so much money basically from the domestic market. I think 13, 14, 15,000 crore kind of a number every month.
What are the 4 or 5 parameters or filters that Centrum is using to identify relative underperformers in this market? Because, you know, everything has doubled or tripled over the last 6 odd months or so, and tons of money is chasing very, very few stocks, most of them centered around the PSU basket. So how are you trying to convince institutional investors to pour in or continue pouring in money in specific sectors?
Well, I think basically if you really look at it, the banking sector itself, which is the largest, there the performances have been very good basically, and there are enough stocks in the banking sector which are still available at relatively cheap valuations. I think HDFC Bank, for example, I think outstanding quality of management, outstanding track record. The stock has not performed for the last 1.5 to 2 years for the reason basically which is nothing to do with the bank. It was a merger basically which was supposed to happen, and everybody knew about it. What is the bank suffering at the moment? I think they have given a stellar performance again this quarter. The only issue remains to be basically that it's been overowned, and that's why you're seeing and getting this opportunity to buy into it. Similarly, you will find several mid-cap and small-cap banks out there. I think BFSI space itself is giving you a lot of opportunity.
When you analyze the small cap and the large cap space, the reason why I ask you this is that the money flow, especially from the retail investor, is intensely focused in this space, even via equity funds. What has changed in this space over the last 2 years, which is attracting so much of interest, both from the retail side as also from the ultra HNI side?
So I think to begin with, 2 years back, obviously they were undervalued. The growth came back basically, and historically we have seen that in a good scenario, when the economy is doing well, the last guy in the line basically starts getting the benefit of the upturn in the economy, and that's what happened basically. So mid caps, mid caps, and small caps starting getting the benefit basically for a Goldilocks scenario of the economy. And accordingly, they have done very well, and market has rewarded them. But then it goes on to a virtuous cycle. So the more the performance, the more money comes into the mutual funds, and the more money goes into the same kind of stocks. Now, the one thing basically which has become a bit negative here is basically that there is a limited number of stocks basically where the mutual fund can invest, given the sizes of these mutual funds. So every incremental money is now going and buying the same stocks, and that is in turn inflating the whole thing. So that is what the problem remains to be at the moment. So somewhere I think that virtuous cycle has to peak out, and I think has already peaked out, and I think some amount of profit taking is happening.
Okay, and since you look at the overall macro trends in the economy, which you sort of import on the markets game plan, where are bubbles building within the economy, and where are these bubbles getting bigger and bigger in size as far as markets are concerned?
I think it's too early to say that we are building bubbles in the market. I don't see any reason for being so speculative, saying bubbles, because I think economy or the market, if you really look at it, basically why the markets, people like us are feeling comfortable even at 18,800, 19,000 is a reason basically that for last 5 years the earnings was growing basically and the market didn't go anywhere. And then now basically for the next 2 years also we are still looking at an earnings growth of 15% plus. Right. So this is what is supporting the market. So I do not see, barring few spaces here and there basically where there might be overexcitement, I do not see any big bubbles getting created.
And with that, it's a wrap on this special edition. Many thanks for tuning in. But do stay tuned on India Today to catch all the updates from the world of news.